March 2nd, 2025. Welcome to Jay's Corner. My name's J.O. I'm a certified financial planner. In addition to that, I have a newsletter, jo.substack.com. Please feel free to subscribe. The link is in the text below today's video. So we're going to dive straight into it today. We're going to be brief-ish, as briefly as I can put it. Basically, what I'm going to talk about is the fact that a leading economic indicator, widely followed by the world, has all of a sudden flashed negative, as you can see here. So the Atlanta Fed GDP now sees economy shrinking after Friday data, and now kind of a stunning number here, which is seeing GDP all of a sudden retracting. GDP, for the newcomers, people who do not understand what macroeconomics is, stay here on Jay's Corner. I'll explain it to you, which is that this is the size of the economy as a whole. You can see GDP now here. It is done by the Federal Reserve Bank of Atlanta, one of the branches. This is a widely followed statistic, and you can see it. The latest estimate is here now, minus 1.5%, all of a sudden retracting. So I'm going to get into how this GDP is actually thought through, calculated, if you will, by the market, by the world. And we're going to get into like macroeconomics 101. And here it is here. So the overall economy, kind of the basic setup here is just by this very simple formula, right? Which is right here. C plus I plus G plus net exports. And I'm going to explain. Consumption would be fairly obvious. This is just our spending on goods and services. Investments is a little bit more subtle. It is not your investments in your 401k or your IRA, your stock holdings. This is not what is meant by investments. Investments here is investments on a plant, right? So company X builds a new plant. Jay's Rib Shack builds a new branch in your location because it's got the world's most delicious ribs. That is what is meant here by investments. We'll continue. G is government spending. And so to give you an idea on how large government spending is in the U.S., here it is here. And this is going to be roughly right. This is just Wikipedia, but this gives you a general idea that 23% of the entire GDP is federal government spending is 23%. Lastly is net exports. So this is by net exports, right? This means, exports less imports. And it is these two items, misspelled, right? It is these two items which are directly in the crosshairs of the new administration. This is what is going on. So DOGE, Department of Government Efficiency, basically everyone has heard of it at this point, right? There's no way, unless you live underneath a rock, that you would have missed this, right? And let me first say that I'm not here to say that it's right or wrong. I'm simply not. Followers to Jay's Corner already know this. This is not really, an interest of mine, meaning that it has to do with your political belief. And rather than political belief, and I'll just go over here. You can see on jo.com, which is my private website, that when I think about my work, down here, I'm not a philosopher and your politics are unwelcome. Because I realize that what I've stated here in yellow. What you think about Doge and tariffs, and we're going to get into tariffs in a few minutes, is going to be entirely based on your own perspective. I'm simply not in your shoes. It's wrong for me. I will say right or wrong. It's not correct. It's not accurate for me to say I know how you feel. This is impossible. It's impossible. I'm not facing your situations. I can tell you right now that I'm kind of unaffected by lower government spending. I'm not directly affected. I didn't say indirectly, but I'm not directly affected by government efficiency efforts. And you can create the narrative here that the efforts of Doge are justified. You can see it here, 23% of the GDP. It also brings up the question about how are you going to replace it? How are you going to replace something that is 23% of the size of the economy? Now, don't get me wrong. Doge is not going to be able to slash, right, the entirety of government spending. That is just not going to occur. There's Medicare, Medicaid, Social Security, right? Those three alone. Right? We can discuss whether or not Doge is going to be able to affect all of these different items. That I simply do not know. I can say though that we're not going to get to 23%. But we are going to have this question about how are you going to replace this stuff? Right? In other words, how are you going to be able to replace all of this government spending? Because someone's receiving on the end here. Someone is receiving. It's one thing just to say, okay, I'm going to go on a fast, right? And if you use a fast, you can say that this has long-term health benefits. And I could make up that narrative, right? I can easily backfit the narrative. And I can backfit the narrative here on how lower and better government efficiency in the long run does help. I can, whether or not that actually comes to fruition is a different matter, but I can understand its logic. Which is, we are spending too much money because we've got these different areas where it's inefficient. We can have the rules of international trade against the United States, and as a result, you have this situation where it is unfavorable to U.S. manufacturing, unequal, not unfair. The question of fair is, somebody else's, it's for someone else to determine. But the question really is who, where, when is this going to be replaced? And the reason for this, that I bring this up, and the reason that I, at the last minute here, scheduled today, is because of this lag time. Meaning it's going to take some time for tariffs and for Doge to reinvigorate other locations. In other words, what has happened, and deep in the weeds of macroeconomics, is this idea of crowding out, right? And the people who don't want government spending want something called crowding out to be eliminated. And that makes sense, right? In other words, that this is too big and it is crowded out these other areas. That is the basic idea. The issue is if you just slash this and all of a sudden put this into red. The question is the lag time. How fast is this going to actually occur? That tariffs could help investments. That is the point of tariffs, right? Meaning that relocate production into the United States. And that means that the final goods will be built in the United States. The question is when. Because some people, the fact is, cannot wait. They simply can't wait, not even for a day. If you go onto social media now, you'll see this. Snap. And you're seeing that Doge then is affecting people. And again, I'm not here to say rightly or wrongly. Some are obvious. I have already made these statements here on the channel, right? Which is that on prior weeks, Medicaid, very clearly. You'll see on that the USDA has these farm subsidies. If you go on TikTok, just go up there and go search them out. You will find them. Which is, you've seen that farm subsidies have been declined and some people have planned, etc., and people have lost their family farms. How true it is, I can't really say. I don't know anybody directly affected. Who else? Recently, very recently, right? Veterans Administration. So to veterans, many of who rely on the benefits, that a cut here is going to hurt certain people. You'll see, again, stories of layoffs. That the government layoffs now affecting Veterans Administration. Ultimately, what is not yet known. ACA and Medicare. That I've made last week, I want to say. Yes. Each of the last 2 weeks, I have talked about the possible effect on the Affordable Care Act and on Medicare. So please go to, after you're done watching today's video, you can see the other broadcasts from the prior weeks. The reason that I've been bringing this up is because, look, you're going to be affected. These are large costs to everyday people in their everyday life, their first issue, before they're looking at their stock holdings or 401k. If you're sick, you drop all of that, right? We know this is a practical reality. We know this. We simply need to know, and for, again, as a quick review, verify your eligibility. If you know somebody, if you are a person who is receiving Medicaid, and that is approximately 80 million people in the United States, 80, that please verify your status. We are hearing very negative stories, even in the best of days. Medicaid administration, handled by your state's Department of Health and Human Services, is complicated stuff. It is. It is complicated fundamentally, and then there's administrative snafu or error. There's human error. And there's a lot. So especially in this day and age, I'm asking people to verify your status. And if you know someone who is a Medicaid recipient, have them check. Something that I cannot do. That said, if your Medicaid has been canceled, then you do have rights. These are in your favor. And this is what I said last week, which is that the reason important, the good news is the flexibility is in the buyer's favor. But you do need to know your status. You absolutely have to know what your status actually is in order for you to even reach out and for me to actually say anything about the matter. On Medicare and the ACA, yes, we don't know about the tax credit. We don't know about the $2,000 cap on prescription drugs. So now your question is going to be here, and the question is, okay, how much of this is real? And that's going to be just the next 15-minute segment. So, first of all, let's just talk about this. Let's just go back to this and how credible it may be. So, first of all, GDP now is a widely followed statistic. Not in the headlines every day until it starts shifting dramatically. You could say, okay, well, this is just government data, et cetera, et cetera. No, this is the smart guy in the room. To give you an idea, not in Atlanta, but this is, one of my ex-professors at the University of Chicago when I was at business school, Randy Crosser. If you look here, this, which I didn't know entirely in full, I knew most, but to give you an idea, he was a voting member at the Federal Reserve. So in other words, this and his group of economists, that quality, right? This quality, and of course, he's a standout. And when he was my professor, he looked like he was like 12. He looks like he's like 20 now. He looked like he was like 12 when he was my professor. But anyway, the point is that he's part of the Federal Reserve. This is the highest end of public servants, and economists, when they're saying we do need to listen. And it's not, and to give you no further, if you needed further convincing, Mr. Market has listened. So, followers to Jay's Corner, and again, jo.substack.com, know that I've got one central message for people regarding financial understanding of anything, which is stocks for show, bonds for dough. And my bonds for dough is the number one most important statistic is this statistic right here. The yield on the 10-year U.S. Treasury note. And you can see that the interest rates on the 10-year note have declined in the face of inflation, declined anyway. We're going to go back to simple, very simple. So this is interest rates, right? And now let's just call this I star. Let's just call this I star just for the moment. Let's just call it I. Equals real interest rates. We'll get into that in a moment. Real interest rates plus inflation plus expected inflation. The point here is that real interest rates are basically a function of economic activity. So you can see what has happened here, which is inflation plus expected inflation are higher. Right? So what does end up happening here? The implication here is that this portion must be negative. Because if this total is lower, this is the result. And we can observe this now, right? Which is that interest rates lower. The subcomponents, though, is in this equation. right? And this is the Taylor rule, by the way. I didn't make this up. I'm not smart enough to make this up. But the point is that real rents are a function of economic activity, and inflation are higher. Right? And we've seen this data by the University of Michigan, what was it, 2 weeks ago? That this is negative, which means that this must be now, it's not only negative, very negative, because it had to overcome, this is positive, right? And let's just call it that way, right? Let's just call this to be positive. We know this is green, right? We know this is red, meaning negative, lower. That means this must be super red. Why? And we can see it here. So what we've seen here is dramatically lower. In fact, to me, candidly, quite surprising. If you would have told me in November, the day after the election, that interest rates would decline, the 10-year note would be down to 4.2, I would have checked you into rehab. Because, excuse me, I don't have one of those mute buttons, unfortunately. But, and the reason is that we've known this. We can observe this, right? We go to the grocery store, inflation expectation, we see it higher. That's fine. But what we also now have seen is much lower. So as a result, the only way to get there is that this must be very negative. And now you can see this. Now everything makes complete sense, right? All the numbers now work, meaning that this is a new statistic-ish, but the reality is that the market was telling you this. Maybe. And we're still yet to see this, right? But something has notably changed here. And again, like I said, right, this is a dramatic move here. You can see it from here, 4.8 to 4.2 in this space. And you can see this is a much longer time frame, what, a 2-year? That this drop here at this speed here it jives here. It jives here. The only possible way for all of these to occur then is the reason that we've got today's question on is recession next? That is the explanation that does fill in the blanks here, right? Which is that it doesn't matter what I think or predict, right? I don't have a crystal ball. You don't have a crystal ball. If you do, j@gh2benefits.com. Email addresses or info@gh2benefits.com. I wonder why we don't have that. Oh, yeah, there it is. info@gh2benefits.com. But what we have here is no doubt lower interest rates, as Mr. Market is telling you. Markets are forward looking. And you can see that the markets have been telling you that the full set is now out there. This is a very difficult year. For those people who are over-relying, I'm not saying completely under-relying. I mean, everyone depends on the performance of financial markets to some degree. I'm talking about over-relying. You can see this is something that at the end of last year is not really what you would have thought to have occurred. And you can see here, for example, before we even get into individuals, that most everything is gone, meaning that, euphoria here, you can see at all-time highs here, gone away in very, very quick order, which has surprised many, and you can see with speed. And this is a combination here that I wanted to point out to people, which is, I've said stocks for show, bonds for dough, right? I realize that. And let's just take a look at what I'm saying and why. So we see this formula here, right? And here it is. Normally we think that interest rates lower means NPVs higher. But that means that also that presumes that the numerators are stable enough to be stable. So when NPV, which is the price of anything, is declining, I'm not talking about the price of eggs, I'm talking about the price of investments, the observed price is lower. It's telling you that this C1, C2, CT here, these are expected revenues, expected net income, expected rents. That the only way for this to be down at the same time that R is down, which is interest rates. Discount rate is interest rates. The only way is for projections of C to be down. And this is the combination I didn't want, that in people in investing markets who are trying to be optimistic did not want to see. Did not want to see this combination of lower interest rates and lower investment markets. You can see here. It took a technical rally, which only the state, I will share my statements only with our stable, which is those people who have embarked on comprehensive financial planning, is that what we actually have here is notably lower, and the only implication that we can draw here is that the reason we are there is because people's projections of C have gotten a lot worse. And this then also dovetails then correctly and makes sense now that Mr. Market is telling you, right? Because I don't have a crystal ball and neither do you. Financial markets discounting uncertainty, thinking through these, the funny thing is people think that this is, when you're an adult, these are all uncertain. All of these numbers here are uncertain. This is a mathematic number. This R here is not constant over time. This is a watered down version of this formula. It's for illustrative and understanding of the framework. But the point here is that these forward rates here, are lower, and yet C is the projections of C, which are also uncertain, are lower faster. And you can see then as a result, difficult, challenging. And now you can understand why I've put these other line items here. That the largest and candidly most important, really, of the companies in everyone's 401k are negative for the year. And this is after a pretty sharp rally from 2 o'clock to 4 o'clock on Friday. It would have been notably worse. And of course, Nvidia down almost, it was down 10% for the year. So we can see how complicated it has sort of become. And you can see Tesla, and this again is after this notably higher. You can see it from minus, you can see it at 2 o'clock, minus 16.9. And now here, it rallied 3% in 2 hours. To give you an idea how dramatically lower financial markets have been, how difficult it has been. Now, Tesla is an idiosyncratic name, right? Because the CEO is obviously very much involved, right, in Doge, of course, as many people already know. Yes, I do think that Tesla is caught in the crossfire. No, I don't necessarily think it's over. I don't have a crystal ball, but I don't think that Tesla is an international company. Let's just leave it there. Global company that is relying on sales in other countries. So as you can hear by my nasal Midwest voice, which is even more nasal now than usual, due to me having the winter sinus infection, I get ill like maybe once every like 18 months. So it's like whenever I don't feel well, it feels like the world's going to end. But you can see here that financial markets have turned negative for the year. And this, like I said, this is better than at its worst. You can see again at 2 o'clock, you can see quite a bit worse. And the reason I leave it there, and you can see it over here, which I've made statements about this in the past, which is it is not, and I'm going to fuddle around here, that savings and strategy is more important, not less. No. It is not the current events of why, right? Today, what I'm saying about the idea of you needing to know, keep up to with what's going on in financial markets is because of your savings and strategy, your financial plan, right? It becomes an element. Reliance on on financial markets is part of it. Inevitably, it's part of it. We're not going to get away from it. I'm not suggesting that you divest all of your holdings in financial markets. No, I didn't say that. All I'm saying is there's uncertainty involved. How uncertain depends on your particular situation, and I'm trying to shed light on how you can understand the complicated inputs. And those complicated inputs are not really well stated, I don't think, to the general public, the point of Jay's Corner. And then on top of that, there's uncertainty involved. So you then get under the wormhole of, it all worked out. See, I was right. Okay. Instead, and like I said, I'm not saying that you should not take risk. It is the central, most important idea that I don't mind the risk that you take as long as it's the risk that you're acknowledging you're taking in advance. And that goes from dental insurance to health insurance to Medicare to your overall financial plan. Because ultimately, I'm trying to help people understand this because what matters is the sum. Under uncertainty, life is inherently uncertain. That part I'm not disputing. I'm just trying to make sure that people understand the uncertainty and if they are adding on uncertainty and it fits their situation or not, which will change from person to person. As I said, where you stand depends on where you sit. Very brief here today. Be sure to like and subscribe to the channel if you've liked today. Hopefully, I've given you some insight on some of the moving parts in a world full of headlines. It seems like every weekend we hold our collective breath. I don't think that's going away, right? That the weekend I'm going on X and I'm on the different news channels looking for the latest headline. I don't think that I'm alone. Have a good Sunday, everybody. Feel free to send questions to info@gh2benefits.com. Thanks.